2025 lied to you. It tricked you. It told you this was the bull market year. It told you ETFs plus adoption equals instant upside, and instead, you got the worst chop, the worst fakeouts, and one of the ugliest corrections in years. But here's the part the market isn't pricing in. 2025 wasn't the bull market. It was the loading phase. Because everything that held crypto down in 2025, all of it flips in 2026. Now listen to me very carefully. What is about to happen in 2026 is not a coincidence. It is not luck. It is a mathematical inevitability driven by 5 specific data-backed signals that have just flashed green for the first time in 4 years. Hey, I'm Jax, and I believe that crypto is the most rewarding financial space of our time, if you can cut out the noise. I've been in crypto for 13 years, and my goal is to fast-track your journey. In today's video, I am going to break down the 5 undeniable reasons why 2026 will be a massive bull market, and I'm not just going to give you hype. I'm going to give you the raw data, the liquidity flows, the institutional signals, and the regulatory shifts, so you can position yourself before the rest of the world catches on. So let's cut the noise and get straight into the first reason why 2026 is going to be historic. The first reason is the liquidity engine has just been turned back on. You need to understand one fundamental truth about crypto and risk assets. They do not move based on technology. They do not move based on adoption. They move based on liquidity. Think of liquidity like fuel in a car. You can have the best Ferrari in the world. That's your Bitcoin, your crypto portfolio, but if the tank is empty, you aren't going anywhere. For the last few years, specifically through 2025, the tank was being drained. Everyone was fooled. They looked at M2 money supply and said, look, money printing is back.
So, we announced that we're resuming reserve management purchases. That is completely separate from monetary policy. It's just we need to keep an ample supply of reserves out there. Why so big? The answer to that is, if you look ahead, you'll see that April 15th is coming up, and our framework is such that we want to have ample reserves even at times when reserves are at a low level temporarily. So that's what happens on tax day. People pay a lot of money to the government, reserves drop.
But they were missing the real metric, net liquidity. Net liquidity is the actual amount of cash available in the banking system to buy assets. And throughout 2025, because of something called quantitative tightening, or QT, the Federal Reserve was draining billions of dollars out of the system every single month. They drained over $2.4 trillion since 2022. That is why the market felt heavy. That is why every rally got sold off. The fuel was being siphoned out of the car, but here is the massive shift that nobody is talking about. As of December 1st, 2025, quantitative tightening has officially ended. The Fed has frozen its balance sheet at $6.57 trillion.
Today, the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1.
The drain is stopped. The hole in the fuel tank has been plugged. We are seeing the TGA, the Treasury General Account, stabilize. We are seeing the reverse repo facility, which was sucking up $2.6 trillion in cash sitting near zero. Do you understand what this means? It means the suppression is over. Historically, no bear market has ever started or sustained itself during a period of rising or stable liquidity. The engine is primed, the fuel is in the tank. And that brings me to the driver of the car, our second reason today, the Federal Reserve. They are about to undergo the most dovish shift in history. Jerome Powell is on his way out. His term ends in May 2026. And the new administration, the Trump administration, is not aligned with Powell's higher for longer philosophy. They want growth. They want a booming stock market. They want cheap capital. The frontrunner to replace Powell is Kevin Hassett. This is a man who has explicitly stated he would be cutting rates right now. He believes in stimulating growth. He believes in supporting the markets. And the market knows this.
We're going to have a bigger rebound in the first quarter. Against that backdrop, it's a good time for the Fed to cautiously reduce rates again.
Right now, the probability of rate cuts continuing through 2026 is sitting at over 80%. Lower rates mean cheaper money. Cheaper money means leverage. Leverage means asset prices go up. But Jax, if this is so obvious, why isn't the price moving yet? Because of reason number 3. And this is where I need to level with you, the institutional setup. Now, I'm going to be brutally honest. If you look at the raw data for November 2025, it looks ugly. We saw $3.5 billion in outflows from Bitcoin ETFs. The retail investors, the dumb money, saw this and panicked. They sold. They thought the institutional dream was over, but you need to look closer. You need to look at what the institutions are building while they flush you out of your positions. While retail was selling, JP Morgan filed for a structured Bitcoin note that guarantees a return if Bitcoin hits certain targets by 2026. While the tourists all packed up and left, Vanguard opened up Bitcoin ETFs to their clients. While crypto Twitter was panicking, Nasdaq filed to increase the options limits on 𝗖𝗿𝘆𝗽 ETFs from 250,000 contracts to 1 million contracts. Why would they need 1 million contracts if they thought the market was dead? Why would Harvard University's endowment increase their position to $443 million, making it their largest U.S. equity holding? They wouldn't unless they see the long-term Bitcoin thesis. The infrastructure is now built. Banks can issue stablecoins, options markets are deep, the pipes are laid. And in 2026, they are going to turn the water on full blast, and when they do, we are going to see reason number 4 play out. And this is probably the most powerful signal on this list, and that is the Great Divergence. I want you to look at this chart. This is the performance of gold versus Bitcoin in 2025. Gold is up nearly 60%. It has been smashing all-time highs. It is repricing against the debasement of the currency. Now look at Bitcoin. It's flat. In some time frames, it's down. Historically, Bitcoin and gold are correlated. They both act as hedges against monetary debasement. But in 2025, they completely decoupled. Gold ran, and Bitcoin stayed behind. This is what we call a divergence. And in financial markets, divergences do not last forever. They act like a rubber band. The further you stretch it, the harder it snaps back. Bitcoin is the only major macro asset that has not repriced yet. The S&P 500 is near highs. Gold is up 60%. Commodities are moving. Bitcoin is lagging. And historically, when Bitcoin lags gold during a liquidity cycle turn, it doesn't just catch up, it overtakes. But there is one final piece of the puzzle, the one thing that has held crypto back for the last 4 years. The dark cloud that has been hanging over the industry. The last reason is the regulatory floodgates. For years, the SEC and the US government were at war with crypto. We had regulation by enforcement. We had lawsuits. We had uncertainty. That war is over, and crypto won. In 2025, we saw a complete 180-degree turn in policy. We saw 89 enforcement cases dropped or halted in the first few weeks of the new administration. 89. We saw the Genius Act signed into law, finally giving a federal framework for stablecoins.
This afternoon, we take a giant step to cement American dominance of global finance and crypto technology as we sign the landmark Genius Act. I pledge that we would bring back American liberty and leadership and make the United States the crypto capital of the world.
We saw the EU implement 𝗎𝗍, providing regulatory clarity for 450 million people. And most importantly, we are seeing a shift in leadership at the SEC. Paul Atkins is in. Gary Gensler is out. The mandate has shifted from prosecute to innovate.
As you consider this headline, it's one that you saw coming. There had been some reports out there. What does this mean for the crypto market specifically? We're looking at Bitcoin. I haven't seen a huge reaction yet, but this is night and day from Gary Gensler.
Absolutely. I mean, they're going to get an advocate for the pro-crypto world, and this is the first time that they've really had somebody in the regulatory repertoire, if you will, that's going to be thinking of the crypto world. And so, Commissioner Atkins, because he used to be a commissioner at the SEC, he has actually come out and has done a lot of work in the crypto space. He worked on for the Digital Chamber of Commerce and so forth.
Do you understand how big this is? For the first time ever, large corporations, pension funds, and insurance companies have the legal clarity to enter this space. They couldn't touch it before because their compliance departments wouldn't let them. Now, the red tape is gone. Banks can issue stablecoins, treasuries are being tokenized, the financial system is merging with the blockchain. This isn't a headwind anymore, it is the biggest tailwind we have ever seen. So let's recap. We have the liquidity engine turning back on with the end of QT. We have a dovish Fed and rate cuts coming in 2026. We have institutions building the infrastructure to handle trillions of dollars. We have a massive divergence with gold and stock markets that needs to be corrected, and we have a regulatory green light that opens the floodgates for capital. Any single one of these reasons would be enough for a bull market. But we have all 5 happening at the exact same time. This is the perfect storm. Now, I know what some of you are going to do. You are going to watch this video, you are going to nod your head, and then you are going to go back to scrolling TikTok. You are going to wait until Bitcoin hits $150,000 before you start paying attention, and by then, it will be too late. The money is made when you buy when others are fearful. The money is made when you understand the data before it hits the headlines. 2026 is going to be a massive year, but only for those who are positioned correctly. I'm going to be documenting my entire strategy, exactly what I'm buying, and exactly how I'm navigating this market in the next few videos. I am not going to leave you guessing. Freedom starts when you hold your own keys. So, if you want to be on the right side of history, make sure you subscribe, and I'll see you in the next one.